Wall Street closes the week lower as rising Treasury yields and concerns over interest rate hikes continue to pressure equities. Stocks in the Asia-Pacific too opened with losses this morning, while the GIFT Nifty is indicating a mildly lower start to trade. Crude closes slightly lower on Friday. Brent trades around $92 a barrel, even as the Hamas releases a few American hostages, raising hopes of de-escalation in West Asia. Gold continues to surge near $2,000 an ounce on safe haven buying as the Israel-Hamas war rages on. ICICI Bank delivers a very strong set in the second quarter as numbers beat estimates on all fronts. Asset quality is at a 9-year high, while loan growth and deposit growth also hit multi-quarter highs. Strong loan growth drives profit for Kotak Mahindra Bank. Asset quality remains stable, but net interest margin declines more than expected. The RBI also approves Kotak Mahindra Bank succession plans. Former Barclays Bank and Citigroup Asia CEO Ashok Vaswani is appointed the new MD and CEO of the bank for a period of 3 years. And convoys of humanitarian aid begin to trickle into Gaza over the weekend. 20 trucks crossed the border on Saturday, while 14 more have crossed over from Egypt and Gaza last night, even as Israelis continue to bomb the Gaza Strip. India, too, sends tons of medical and disaster relief material to the region over the weekend. Hey guys, good morning and welcome to Power Breakfast. I'm Pavitra. Those are the top headlines. And first off, I'd like to wish all of our viewers a very, very happy festive season and a beautiful Dussehra to all of you. You know, unfortunately, the global news flow has been extremely unfortunate, which really continues with the war, raging on in the West Asian region. And on the back of that, you have all of the Asian markets which are in the red, all of the global markets in complete risk off. And we'll take a look at what's going on there just to kick things off. So some of the Asian markets are shut for trade today. You don't have any rates coming through from Hong Kong and China because they're shut. But the few that we have, they are, opening up with pretty significant cuts. You have the Taiwanese index, which is down around 0.7%. Straits is down. You have Nikkei seeing a cut of around 0.4% as well. So across the board, you know, that entire week handover that we got from the US is definitely finding its way into the early morning trade in the Asian markets. The GIFT Nifty will also come up for you, and it is indicating that the start for our own markets could be in the red. It's not too much lower right now, just around 17 points in the red. But remember, it has been a week, more than a few sessions for us right now. Even on Friday, we did end around 0.5% in the red. So this is what the implied open for our own markets could look like ahead of the market holiday tomorrow. Now, let's also talk about the US markets because we did end sharply lower on the US on Friday. Now, the Dow was down over 285 points. The S&P 500 closed around 1.26% lower, and the tech-heavy NASDAQ also shed around 200 points at the close of the trading session. So that index was down 1.5%. Now, the sell-off in the market comes as the US 10-year yield touched 5% and actually moved a little bit higher than that as well for the first time in 16 years. That is what has continued to pressure equities across the board. However, after touching that 5% kind of mark, we did see a little bit of coming off of those levels. Now, this is still a multi-year high level that we are tracking very closely. And remember, this is one of the key triggers that has been leading to this big sell-off that we're seeing across the US and across several markets across the globe as well. But for the week, if you look at the indices, these are the kinds of rates that we did see. So the US market was sharply lower. The Dow was down 1.6%. The S&P was down around 2.4%. And the worst, like you can see, was the NASDAQ. For the week, it was down over 3%, 3.2% there to be precise. But sticking with the US markets, let's also listen in to Atlanta Fed President Raphael Bostic as he talks about the outlook on the inflation in the US and where the economy is really headed right now. Listen in.
These are complicated times because there are lots of things going in all directions. We have inflation's come down a lot, and I think the momentum is going to continue to be that way. But you see the resilience in the broader economy, which makes it difficult, and that it's a complicated thing. And so in talking about the economy, it's always a challenge because you have these cross currents. Whatever narrative you want to tell, there is some data that's a counter on it. I think the trajectory of the economy is likely to go in a way that is very consistent with what my outlook is, which is we are not going to see a recession. That's not in my outlook. We're going to see a slowdown, and inflation will get down to its 2%.
All right, that is an important word coming in, but let's also bring you a word from Nathan Sheets of Citi on what he has to say about Fed Chair Powell's speech and the big rise that we've seen in the U.S. Treasury yields.
Our baseline expectation is in line with that of the Federal Reserve. that the Fed can get further traction on financial conditions by holding this rate at 5.3% for some time. And as they hold the rate, there will be further headwinds to economic activity. And frankly, that's supported by this run-up in 10-year Treasury yields that we've seen. That the Fed has tightened at the short end, and that's pulling back on financial conditions generally. And now that's manifesting itself after a long while in a higher 10-year Treasury yield.
All right, that is some important opinion that we're looking at this morning. But if we are talking about the global markets, I also do want to mention Europe because we saw a sharp sell-off on Friday. So, and this was across the board as well, right? So the French CAC index, the German DAX, FTSE, all of them are on your screen. And like you can see, we've seen a big drop come through over there. The CAC was down 1.5%. Similar cuts seen for the German and the FTSE markets as well. Now, if you look at the Pan-European Stock 600, that was down 1.4% on Friday. This is the lowest level that we've seen in that index for the last 7 months. If you look at it for the week, that index was down around 3.5% as well. Now, in terms of some key data coming out of the region, we had producer prices in Germany, which posted their biggest year-on-year decline on record in September. So prices were down 14.7% if you look at it versus last year. And the estimate was of around a 14.2% kind of decline. So that is some important data coming out of the region as well. And that's everything that we're looking at globally. But let's now talk about how all of these overnight cues impact our own markets and what you should track in terms of the trade setup today. We have Mangalam, Vivek, as well as Surbi all here. Guys, a very good morning to all of you and happy festive season to everyone. But Vivek, let me come to you first. You know, we were just going through the global setup. It's a complete risk-off across the board. Take us through what you're tracking this morning.
Well, absolutely right. Good morning to you too. Like you mentioned, you know, the risk-off sentiment last week, like you mentioned, U.S. markets ended quite deeply in the red. Indian markets too. Last week actually saw a significant amount of underperformance as well. Now, like you mentioned, you know, Friday's close across all equity markets worldwide was very weak. In fact, even crude oil prices, Brent prices too have cooled off from a 2-week high. Now, coming to Indian markets. Now, Indian markets last week, both Nifty as well as the sensex fell over 1% each. Now, on Friday, you know, the key point to note was the fact that the mid-cap index was the one that significantly underperformed, and market breadth on the back of that significantly worsened on Friday. And that will be the key point to watch out for, especially in this coming week, with a whole slew of results that are actually slated. Now, on Friday, FMCG stocks like ITC as well as HUL, you know, these reacted quite negatively to the results. Along with that, you did see individual stock packs, individual sectors like city gas distribution companies, both IGL as well as MGL, on the back of new EV fears, you know, that also underperformed quite significantly. Today, what is it that we are watching out for? Number one, Bank Nifty, very important to track, given the fact that ICICI Bank, Kotak Mahindra Bank results, as well as new CEO coming in for, Kotak Mahindra Bank, very important trigger, and that will be something that will give direction as far as the Bank Nifty is concerned. Along with that, a lot of results coming week. Today, Torrent Pharma being the key. Both the, Gift Nifty is actually indicating quite a muted start for our own markets today.
All right, Vivek, thanks a lot for taking us through all of those cues. Quite a muted start. Let's see how things really move from there. We have Surbi now, who's going to take us through all of the stocks that we should watch. By the way, it was an earnings-heavy weekend where both ICICI and Kotak, like Vivek was pointing out, posting their earnings. Surbi, take us through the numbers.
Hi, good morning. So apart from the big banks, we had a lot of other earnings coming through. Let's start with Kotak Bank. The earnings were ahead of the poll. It was aided by the robust business growth. Deposit growth was up 23% on a year-on-year basis. Loan growth was up nearly 19% on a year-on-year basis. And the asset quality was the best in the 33 quarters. ICICI Bank, the net interest income was up 24% on a year-on-year basis. And the net profit was up 36%. Paytm, the EBITDA improvement has continued. The total income was up 32% and the net loss came in at 292 crores versus 572 crores same time last year. JSW Energy, good set of results. Revenue was up 37%. EBITDA has nearly doubled at 1,886 crores and margins came in at 58% versus 38% same time last year. L&T Finance, the net interest margin is at an all-time high of 8.62% and the ROA is the best in 16-quarter high. It has 2.42%. Amber Enterprises, the revenue was up 24%. Margins came in at 6.4% versus nearly 5% same time last year. A lot of other companies that will react to numbers: Poonawalla FinCorp, Credit Access Grameen, RBL Bank, Suntech Realty, Rajratan Global Wires and Rosari Bio.
Okay, Surbhi, thanks a lot for catching us up on all of that action that came through over the weekend in terms of these stocks. But let's also talk about cues from the futures and options space. Mangalam, we do know that it's going to be a little bit of a muted start this morning, but take us to what we should track from there.
Well, it is the beginning of the October series expiry week as well, so that is something that we'll be watching out for. Yes, like you pointed out, there would be a muted start because of global weakness. So the GIFT Nifty is indicating a start mildly lower. But interestingly, what the GIFT Nifty is also doing is telling you that the start is going to be around the lows that we saw in the last two trading sessions. And that's a bit positive because we have seen some purchase at the lows of around 19,500 itself. The question is whether that sustains or not. The FIIs, they sold about 630 odd crores in index futures in Friday's trading session. The longs have actually inched lower to around 26 odd percent from 29%. They unwound around 7,300 long contracts, as you can see, and the shorts have also inched mildly higher. So, you know, there are cues of mild caution, but nothing worrisome. And same was the case in index options as well, where they sold about 8,100 odd crores. They bought a few more puts than calls, and they sold a few more calls than puts. So if you just take a look at it, they sold about 1.8 lakh calls versus 1.4 lakh puts. You write more calls when you believe that the upside will face congestion. At the same time, you buy more puts than calls when you want to play a little for the downside, but it's not way too much to really worry. If you just take a look at the range that the option writers are playing for as well, 19,400 put was extremely active on Friday's trading session, as was 19,450 put. On the way up, 19,600 call and 19,650 calls were also up. What are you telling, in terms of the range, what the option writers are expecting? They expect support to be around that 19,350 to 19,400 mark, given the premia that are there on the 19,400 put. And congestion comes up around 19,600 to 19,650. And for technical reasons as well, there is congestion at that 20 and 50-day moving average, whereas there is support at the 100-day moving average of the Nifty as well. For the Nifty Bank, we'll watch out for support coming in at 43,193, and it'll be also important because 25% of the Nifty Bank, which is ICICI Bank and Kotak, will be reacting to numbers. A lot of stocks came out of F&O ban. For brevity, I'll just mention Delta Corp and names like MCX.
All right, Mangalam, thanks a lot for taking us through all of those cues. That is the trade setup as we see it this morning. But with that, it is time for our first break on the show. When we come back, like we told you, it's going to be a lot about the Nifty Bank today, with both ICICI Bank and Kotak Mahindra Bank posting their second quarter numbers over the weekend. So we'll get you the fine print in just a bit. Welcome back. You're still tuned into Power Breakfast, and let's bring Abhishek on now, who, by the way, has had a very busy working weekend this time around. Abhishek, we had both results of ICICI Bank and Kotak Bank which came through. Take us through ICICI Bank first. Solid set?
Well, it's a good set of numbers coming in from ICICI Bank, and records galore over there. In terms of all-time high, the quarterly ROA and quarterly ROE are at all-time high. A quarterly part of ICICI Pru, ICICI Sec and ICICI Home is at all-time high. Asset quality, both the gross NPA and net NPA ratio are one of the best in last 9 years or even more. A deposit growth on a YOY basis close to 19% is the best in last 10 quarters, and loan growth sequentially at 5% is the best in last 6 quarters. Overseas net interest margin at 1.56% is perhaps one of the best in last 7 years or 28 quarters. Unsecured book that continues to rise, one of the highest in last 24 quarters, coming in at 20.75%, and that's aiding the net interest margin. In terms of 11 quarter low, you are seeing the stress decline, so restructured book at 0.32% and annualized slippage ratio of 1.69%. On the flip side, CASA has been declining, and that's for the industry. CASA ratio is at 35 quarter low and CASA per branch is at 9 quarter low. Watchlist has increased a bit, but as a percentage of the book, it remains under control at 0.43%, and they continue to report treasury losses in Q2 like they did in the last year as well. In terms of P&L, it has beaten ARPOL both in terms of NI and PAT. For Kotak Mahindra Bank, there is a new MD and CEO Ashok Vaswani for 3 years from 1st of Jan 2024. What has worked is that the deposit growth of 23.3% YOY is the best that you are seeing in last 20 quarters. Loan growth YOY, it's the best in last 3 quarters, and sequential loan growth growth is perhaps the best in last 6 quarters. Asset quality, they continue to improve, and subsidiaries quarterly PAT is perhaps the highest ever that you are seeing. What has not worked is that the net interest margin compression was estimated at 15 basis points by brokerages, but it has come in at 35 basis points. Slippages have increased. Annualized slippage ratio is perhaps the highest in last 5 quarters. CASA ratio is the lowest in last 6 years, 23 quarters to be precise, and operating profits have declined sequentially, perhaps the first time that you are seeing in last 5 quarters. In terms of P&L, both the NI and PAT is a beat on our poll. Back to you.
All right, Abhishek, thanks a lot for breaking down all of those numbers for us. Kotak Mahindra Bank has been a bit of an underperformer, so it will be important to see how the stock moves, especially after news came through of the new MD and CEO. It was at the high point on Friday and it was a top gainer as well on the index. But with that, it is time for a short break. On the other side, we're going to shift focus from equities and talk all about the commodities market. Stay tuned. Manisha will bring us that update. Welcome back. Let's now bring you the latest updates from the ongoing conflict in West Asia. As the war now enters the 17th day, more than 4,000 people have been killed and over 14,000 have been wounded in Gaza. As Israel continues its military campaign against the Hamas and initiates a total siege of Gaza, aid has begun to flow into the conflict-ridden region from the Rafah crossing at the Egyptian border. Now, 20 trucks crossed the border on Saturday, while 14 more have crossed over from Egypt into Gaza. And this is last night, even as Israel continues to bomb the Gaza Strip. Yesterday, External Affairs Ministry spokesperson Arindam Bagchi announced on Twitter that an Indian Air Force C-17 flight carrying nearly 6.5 tons of medical as well as 32 tons of disaster relief material has departed from the El Arish airport in Egypt, which is roughly around 45 kilometers away from the Rafah crossing. So that is the latest that we're getting out of the West Asian conflict. We're going to keep bringing you updates on that front. But for now, let's also bring Manisha in and try to understand what is really going on across the commodities as well. Manisha, there's a little bit of easing of the crude oil prices. Anything, at least there's no further sort of move that we've seen higher on that front.
Oh, well, yes, absolutely. And we have seen 2 weeks of constant gains, and some profit-taking is what we've started the Asian markets today with. With the aid convoys starting to arrive in Gaza Strip, as you mentioned, there is some ease off in the risk premium into the markets, and that's led to some profit-taking as well. Also, the U.S. has suspended sanctions on Venezuela, so that crude oil will eventually start coming into the market. But there are supports from the deficit estimates in the fourth quarter is the reason you have seen the crude oil prices hold above $90 a barrel. For the metals as well, we've seen gold prices come off a bit. We did see $2,000 an ounce of level on Friday. But since then, there has been some profit-taking here. Having said that, the profit-taking only is in the dollar terms. Otherwise, gold has continued to surge in other currencies like the Japanese yen, Chinese yuan, Australian dollar. Gold actually has hit an all-time highs in all of these currencies.
Okay, Manisha, thanks a lot for getting us all of those details from the commodities basket. With that, we're going to wind down on the show with the news that Asian markets are lower. The GIFT Nifty has slipped even more. When we started, it was just around 5 odd points in the red. And right now, we're seeing around a 45-point decline. Thanks for tuning in to Power Breakfast. We have Bazaar Morning Call up into